Good afternoon, traders and investors. Today is Thursday, March 9th, approximately 3:30 p.m. Eastern Standard Time, and we're just going to do a quick wrap up here of the weekly price action. Really, nothing has changed. Everything is going exactly as anticipated, and I'm really very happy about the current drop in Bitcoin. I'll tell you why in just a second. This is our Bitcoin chart. I will get to that in the next few minutes. We're going to start as always with the dollar, find out what's going on. And you can see here that the dollar has come up to retest this descending purple trend line. In previous videos, I noted that I would have liked to see us retest here, this area of confluence where the 200-day intersects that descending trend line. But since it did not intersect there, I'm expecting we break to the top side of this descending trend line and retest that 200-day moving average at some point in the future. Now, break to the upside of that descending trend line is bullish for the dollar, which then, of course, weighs heavily on the market. So I do not want to say it's a break to the upside. However, I am at this point anticipating a break to the upside of that descending trend line. As well, you can see this black trend line here. That is the neck of something that looks to be an inverse head and shoulders pattern. That is very bullish, the dollar. Now, if that pattern does play out, let's see where it takes us to. We'll draw from the neckline here to the bottom of the head and move that to wherever we are going to break out. Looks like it's taking us approximately to 110 to 112 on the dollar. Somewhere up here is where what I would anticipate the dollar to go. Of course, that is going to again weigh into market price and take stocks especially down even further. Of course, I do expect crypto to follow that. All right, so if that plays out, we have to keep our eyes on that. That's a big if, but so far it's looking like it wants to. All right, on to the VIX here. VIX, as I said, is a measurement of fear. VIX has spiked big today. In fact, we're almost breaking to the upside of that descending wedge once again. Now, fear is often hard to measure because, by definition, it is irrational. And so to measure fear with patterns and levels, etc., I only place so much weight on technicals when it comes to measuring the VIX or the fear index. It's hard to measure irrational human behavior in the collective, and that's essentially what we're trying to do with the VIX. Nevertheless, it is important to notice that we are breaking right now, just fighting with the upside of this descending wedge. And even if we don't break it, which I don't expect we will today, let's say we come back down and hit the bottom side of this, at some point in the future we should break to the upside of that, and this is a bullish technical pattern, so it should take us even higher at some point in the future. Something to watch and something to put on your charts, guys. All right, on to the next. We're going to look at the US 500, which is the index that we are tracking in the stock market. And you can see that the S&P 500 has taken the price action of the dollar and the VIX to heart, and they have dropped. So we have dropped. At this point, we're below the 200-day moving average. Now, in my opinion, that is a good thing. I would like to see us test the upside or the top side of this macro downtrend sooner rather than later. What I mean by that is, see this wick down here? We came all the way to 39.08 on the S&P 500, US 500. If we could even wick down and touch the top side of this macro downtrend today, that would be great. That would constitute a retest of this macro downtrend, which, as I have been explaining in past videos, I have been expecting. So if we hit that and retest that sooner rather than later, we will have less of a price drop than if we test it, let's say, down here somewhere. All right, That is quite a ways down the road. But if we don't get this thing tested sooner rather than later, the drop is going to be quite significant into the future. And judging from our dollar and our VIX chart, that very well could happen down the road. Let's take a look at our US 10-year and 2-year Treasury to see what they're telling us. And so the 10-year has dropped today, actually, and we are sitting on that support, which I said would act as support. I don't expect us to just break straight through that now that we're back above it. As I said previously, we are going to use that level as support. Additionally, see this thin blue line here? I drew that because I wasn't sure how significant that would be in the future. But let's just zoom out here and see where I started this. March of 2022. Touched it again in August of 2022. And then we broke below it and back above it here when we broke above this downtrend macro line. Now, it is coming into play once again, and I'm wondering whether we will use that area as support. If this intersects with our level here, that provides a good area of confluence and even stronger support, taking the 10-year Treasury higher, which of course means that rates will continue to be hiked according to the Treasury. This is what the 10-year Treasury is anticipating. So what about the 2-year, which is more of a shorter term focus? We have broken above that level of resistance, which now should act as support. Looks like we've come down hard today on the 2-year Treasury. I'm not sure if we're going to retest that right away, like within the next few days, or whether we continue. It looks like we have somewhat of a trend to the upside here, and whether we continue to follow this trajectory upwards. And then at some point in the future, we break that and then come back down to the downside and then retest that support, bounce around before we can finally break down below. Hopefully that would be, I say hopefully because that would indicate a weaker dollar, which would lift the markets and therefore cryptocurrency as well. Now, currently, I think I read somewhere what is anticipated with the Fed is 25 basis point hikes all the way through June, at which time we get a pause to August. This is what the market is anticipating. And then a pivot in August and a reduction of rates at that point. I don't know whether that will be the case or not, but that's what the majority of the market is currently betting on, and it's worthwhile to make note of what most of the market anticipates, because generally, if the market is it turns out to be somewhat of a self-fulfilling prophecy, if that's not even the current sentiment of the Fed itself. Okay, so the US 10-year over 2-year Treasury is highly inverted, and we were above 1% here, 1.1%, and just today broke back below the 1% inversion curve. And you can see never before in history have we been this low on the inversion curve. And so it is giving us some red flags and some warnings for the future, something to be keep note of and keep on your radar, be aware of. This is not a good thing when you have an inversion yield that steep. The euro dollar is interesting as well. Now, I've explained this in previous videos. The euro dollar is a great indicator for what might occur in the future in terms of Fed decision on the rates. And since the 80s, really, we have been above this. See this brown trend line, ascending trend line. We broke it below it quickly in 1989, and then came back above it. And then since that time, the dollar has been doing nothing but getting weaker and weaker and weaker. Obviously, if you bought a home in 1989, you would know that buying the same home from 1989 to 2023 would equal a steep curve to the upside in price. Likewise with almost anything else, whether it be an ounce of gold, a new car, any commodity, any tool, any metal. We have at least doubled, tripled, in some cases quadrupled the price of various assets, tangible assets, and commodities in the market. And that is because the dollar has continued to get weaker and weaker. And now what the Fed is trying to do is make our dollar strong against all other currencies. And this is where the euro dollar futures anticipated what the Fed was going to do, and we broke below for the first time since the 80s this ascending trend line. Now I want to zoom in here real quick because I want to show you just recently what has occurred. You can see the euro dollar was just flat across. This was indicating that the euro dollar was not sure that the Fed would continue interest rates hikes. So it just stayed straight across in line with that 50-day moving average. And then just recently, like within the last 2 days, it dropped severely. This indicates that the euro dollar anticipates Fed continued rate hiking. All right. So again, I would say that the market usually gets it right when it comes to the rate hikes. So we should anticipate at least one more rate hike. But like I said, most of the market is anticipating rate hikes through June. And at the June time frame or interval is when the Fed begins to pause and then pivot in August. That is currently what I am seeing in my news feeds. Okay, now, we have difficulty. The Fed has difficulties fighting and tackling inflation when the current administration continues to print money at record pace. All right, this just weakens the dollar. It's like if you guys just think about if you were playing Monopoly and you had a secret printer in the backdrop, which you could just print your $100 bills. You could never lose until at some point, the printing of so much currency gets injected into the game, and all participants have more of everything, making the dollar weaker and weaker. So those prices that are printed on the board for Boardwalk Empire would have to go much, much higher in order for the game to continue to be interesting. Otherwise, everybody's just going to get bored and quit. And in real life, that is essentially the way that the Fed is working. They're printing money in the background so that they can loan it to the U.S. so that the U.S. can then do with it what they want, what the government wants, whether it be buying vaccines from pharmaceutical companies or giving it to Zelensky in Ukraine to fight Russia. Whatever the U.S. government wants, they borrow from the Fed, which happily loans it to them because they charge interest on these loans. And the Fed is a private bank. of course, you all are smart people. My followers are generally smart. And know this is not a federal institution at all. It's a private bank that is loaning the federal government money to pay for these various activities, projects, programs, plans, etc., etc. And in that way, the dollar continues to get weaker and weaker for the American public. And, you know, so that's the way inflation works. But a weaker dollar is priced into these stocks, and that's why it looks like the stocks, stocks have reached all-time highs. The Dow, the S&P, the Nasdaq. I think the Dow reached what I don't know what the Dow is at right now. What is it like? Oh, it's over. Where's the Dow here? DJI 32,300. All right, and so if we go back in time and history and zoom way out, you can see, the Dow has done nothing but go up, up, and up. Well, that's because the dollar has gotten weaker, weaker, and weaker. All right, so here is our Bitcoin chart, and I'm going to zoom back into the daily here. As I stated earlier, Bitcoin is not surprising me at all. It's doing exactly as I expected. And we are coming up to this ascending trend line, which is a good thing in my opinion. I think we can touch that, and my hope is that we actually wick down and kiss that 200-day moving average, and then use all this area here, this area of confluence, as support and form this handle. Now, should we break back below that 200-day moving average, all bets are off. It's trouble for us guys. All right, so we have to watch this very closely. We can break quickly before this June, below this June 2022 ascending trend line, this brown trend line here, and wick down and touch that 200-day, and even wick down and touch the 19,500 support. I'd be fine with that. That gives us a nice area of confluence for support, but we have to jump back above and stay above that 200-day moving average. Any move below that 200-day moving average is going to be a disaster for Bitcoin. So what is helping Bitcoin currently move down rapidly is news that is causing some FUD, and the recent news is the Biden administration wants to do away with tax harvesting on crypto. Essentially what that means is they will only win when you win, and you can only win one way, all right, if crypto continues to go up. If you take losses or incur losses on crypto, tough, all right. But if you make gains, the government wants to get their hands on some of those profits as well. And so that's causing a lot of fear or FUD, fear, uncertainty, doubt in the market. And that is bringing the price of Bitcoin down rapidly. But on a technical basis, this is a very good thing. I wanted to see us touch this trend line. I wanted to even see us touch this 200-day moving average. And if we can get that and use that as support and move upward, that will be a good thing from a technical standpoint. Okay, I think that's about all I have to say in this video today. I'm going to wrap up here quickly. If you guys find this information helpful, don't forget to give me a comment, give me a like, share this video, subscribe, whatever you can do to promote the information here, and that way I know it's valuable. Now, if you don't find the information as useful, then don't do that, but I'm only asking you to do that if you do find it useful. All right, until the next video, peace, y'all.